Good afternoon, everyone. I thank you all for giving the Stocktwits room a try here at Premium Trades. What we are looking at is how we go about this. There's a lot of information here, and I want to get it to you in a way that you can use it. There are two ways that I do it. I will first send you a note, and I will also update the trade calendar. Now, the notes are going to be directly in that stream space, and I urge you to reach out to me. So let's talk a little bit about how the trade setups look. And we'll go through them in just a bit, but I want to talk to you about what's active, what's in the wait state, what we're looking for, and so on and so forth. So this trade is definitely underwater, but I believe it's in the middle of a squeeze, and it's being chased for the only strength in retail. So I have the short weekly 100 105s that are completely in the money right now. So this position is, I got in at 262, so I'm down 238 if everything expired today. Now, I do have it short for about a month, and so I think that what's going to happen here is an exhaustion event that pulls back and comes into the breakout level. I do believe this is a long, slow leak, and we'll be able to do good things with it from there. The next thing that we're looking at is VNQ, and what I'll have is an active, this says partial, but we really are fully engaged now. I have 200 shares in here now, 100 at 91.69 and 100 short, for a total of 200 short at 91.94. And we have both one short call spread at 92.94. This is the September call spread, and there is still time for you to enter into these spaces. Here's what might make you a little nervous if you're in here. Many times when we work with traders, we see the breakdown of support, and then we look for weakness and we follow through. I do not use that approach to trade. I trade in the general sense that I'm looking for value, and that's either a value sell event or a value buy event. And so a value sell event will usually be right near highs that we've seen, but they've broken down and they are starting to look from a momentum perspective like they're going to fade. And so trying to do that with the space. I know it might make you a little uncomfortable, but it is a good strategy. We're already up, closed. Everything that we've closed, fortunately, has been in the green. And so we're up about $1,300 in the last couple of weeks. And this is not staring the charts down all day. This is setting your trades up, getting your alerts to go off like they should, and I'll be talking to you about that very shortly. Okay, so what we're looking for now, this says wait state. It means that I am looking for gold to do something very specific. Now, everybody's on the gold train, and I think that that train is a little bit close to its destination, and so I really wouldn't like to go there right now, but pullbacks should give us good opportunities for buy zones. Let's take a look. We're going to look at motive wave, and we are going to look at this gold miner, and we're going to use this template here so you can understand what I am looking at. Now, here's what we're seeing. Up here, last week, we had a bearish engulfing, and so what we're looking at this chart to do is to bounce and then fail and go through some of the thin volume pockets that the chart is experiencing. And those volume events should be fairly solid for a pullback into about 26. Now, we had, let's see what today looks like, right? We had a day that really is very much sideways in the general space. So two things can happen here. It's going to hold and then bounce. Don't chase it, because this bounce has got technical divergence all over it, and it's going to have some significant trouble up at the top. What I don't want to do is short this, because the volatility in here could get a little sticky and the chart could explode up to the north because there's so much happening in the chart in general, okay? So what we see here is technical divergence. I use an SMI, use MACD. That's telling me, listen, what I need for this chart to do is take a breath. So it's going to do some wave rotation, and it's going to go from here likely down into this area where we'll start to potentially capture some gains. Now, if it strengthens over the next few days / week, and it comes down into 27 and some change and begins to hold there, I will reevaluate that space. But that is really what we are looking for. And that's why that's in a wait state, because I'm looking for this weakness to develop, catch hold, let people think the trade is over, and then we get into our space. All right, so now we have a partial position here, right? I'm going to continue to add shares because I believe we are at the bottom here. But if we take a look at this chart, the question would be, why are you picking something that looks terrible like this? And I will show you. If we look, we can see there's been a dreadful problem with grains over the last couple of years. But during the August-September profile of every year that we can look at, what our chart does is find an interim low and then bounce to an interim high. That's what we're playing right here, right? We're just playing a repeatable pattern. On top of that, I live in the Midwest, and we are going to have trouble when it comes to crop time. We didn't even get half of the stuff in the ground, and most of them are planting so that they can get their government subsidy because they don't know that the crop will be ready when it's actually time to harvest. So, that being said, this is cyclic motion, and it happens all the time. Notice this one in August, a little bit drippy into the September area, but it does pull up, and that is why I have our options expiring in October to give the chart a little bit of room in case we have a noisy event or a late run to the party when the chart is coming in where it should be holding, okay? So that is a very nice pattern that we see all the time. That's why that trade is on. Feel comfortable about it. It's still at the bottom of the range, but that trade is 2 months minimum that we'll be sitting on that particular chart. All right, we're looking at Disney. Disney looks weak. We've got a whistleblower. They've got all kinds of data from several years saying all kinds of things. And so Disney has had a little bit of a tough go of it, right? As we take a look at the weekly, it's dropped significantly over the last 3 weeks, but it's holding our edge, right? This is why 132 is our stop. Now, what have I done? I've gone in long twice, and I bought stock and then sold it because I don't like the way it looks up here. It needs to hold. That being said, if it starts failing here, it's going to bounce, but we will have to get out because that's a very big candlestick to the south, and this chart might have a tough time. We don't want to sit in while it rotates all the way over. So what we have in our chart here, we have our Disney. We have the short October puts. That's bullish, of course. The 130, 125 at 157. Those are both fine. We have the October and we have a September one, actually. Where is our September one? Well, did we just have October? It's interesting. I must have taken that in another space. Oh no, here we are. September 135, 130 puts. All right, and we also have the 130 and 125. Now, of course, this is in the money, right? Because our stock is right here at it's a little bit above 135, 136, just above 136. So it's just outside of the money. We really want to see this spike, or else we'll have to roll it into the following month. But we're not really going to worry about that. We're just going to see how it moves across the way a lot of people are thinking that this chart is going to move to the upside. All right, so now we have an October iron condor, 220, 230. That's our short call side. 180, 170, not 70, my heavens. 180, 170, 323. We're looking for 50% profit for the majority of these, all right? We're not here to take things into expiration. A lot of people say, oh, you know, I just don't want to pay that fee on the back end. I just want it to expire worthless. Well, that's great, The market doesn't really concern itself with whether we want to pay commissions on the back end or not. So we're just going to do what the chart gives us, and we're going to move ahead. All right? Now, we've got this holding nicely. Let's take a look at Apple very quickly. Apple is sitting on the upper edge, right? We have the 220, 230. Here's why I don't like Apple for any higher motions than 220. This chart is under quite a bit of distress in my mind, and it's not really moving up on bigger volume. And so my suspicion that 220 is the edge of that formation is really because of this old resistance and how much negative drift we have on the chart in general, right? Particularly from a tariff perspective, this one might get a little kicked around, but there's some things going on with Apple also that make us say, let's put the brakes on that one just a little bit. So I think this iron condor is going to do very nicely. Again, this is theta erosion, and we'll see how it goes, right? These two are longer term, they're income generation type of positions. The XLE, a lot of people are very bearish on energy. I mean tremendously bearish on energy. I'm not one of them, but this doesn't look fantastic, okay? It really doesn't. What we have here is a chart that is trying to make a bottom. So this bottom is extremely important. It goes all the way to January 16, and it's sitting fairly sideways. Now, a lot of people are thinking, hey, this could fade pretty dramatically. I'm not one of them. I'm not one of them. And so I am looking for this formation, which is giving me some bullish divergence, to maintain this bottom and start holding the edge. Okay? So would I like the chart to stay above 56? Why, yes, I would. I really would. I would like for it to stay up in this zone. So we have two positions here with the XLE. We have an iron condor, short the 60-63s, and the 56-53 puts. Another reason I would like for it to stay up above 56, right? We'll just see how that one goes. Again, it's something that's going to trap price in a range-bound area, and we should be perfectly fine in here. Just don't get skittish. All right? So we have stock that I went in at 56.43, and I let it go at 58.28. And you'll see that down here in the closed trades. I'll talk about that in just a bit. But what we do have left is the spread, and if this chart begins to look a little more favorable from a momentum perspective, I'm going to look at potentially getting involved again at that 56 area to see how it holds. My goal is, can I get to a bottoming space where I see a lot of buyers showing up? And that way I'm going to be able to participate with the least amount of risk. Okay, so that's what's happening with XLE. This one, significantly underwater, right? Now, my short puts aren't. My short puts are sitting, let me check my space over here. I've got a couple of different things going on with this Oxy trade because I think they're going to make it, but we shall see. Hang on 2 seconds. Okay, so my short puts, I sold the September 40 puts at 78 cents. They're now, I would have to buy them for 44 is what they're valued at. So there's almost 50% there. We've got about 9 more cents to go before that's a 50% return, and that's going to go. The long stock has been a little tough here at this 45 level, and it's choking around the zone in a way that I don't like that it's doing, right? But I only have a couple hundred shares here, so we'll see. Now, this is the one that's the wait state. What I thought this chart would do would be bounce and then fade, but it's faded first. So that means it could hold its bounce. We'll see. We'll see how this goes. All right, so let's talk a little bit about the closed trades. We closed AMD. It was a really nice short. Okay, we opened it on 8.9, and we shorted the stock, and we shorted a call spread, and the chart did so nicely. It fell in 1 day to 32, and I took it off. Should I have stayed? Absolutely. Where is it now? 31. It's going to try and bounce. The problem is, a lot of folks are thinking semiconductors are going to be gangbusters, but they're not. And there's a chart that shows why that is, but we're not going to worry about that. Semis. So this one is closed. You'll see at the edge of here when you open this. Right, you're going to see that here's what we have covered. Okay, all of these we've covered. XLE shares went this morning, and no, yesterday morning, excuse me. So instead of 58.60 that I wanted, I only got out at 58.01, and we're still sitting in the iron condor. All right, so now here's how we look at the calendar. Every day, you get to see exactly what happens. So today, I added the short September call spread at 90 cents, and I shorted another 100 shares of VNQ at 91.94. Yesterday, I had my first set of the short shares, and then I did one long put and one long spread. And then I also did one short target September 24. That is a weekly option spread. So I'm going to have theta erosion in that chart just so long as it steps outside of that range. All right, the day before that, on the 20th, I covered the XLE shares. I went long the 10 October 16 calls in DBA. Hang on a second. And I also took 100 shares at 15.03. Okay, so this tells you exactly, there won't have a profit marker there unless I've sold out of the trade, but you can see, here it is on the month, all right? So our monthly total, we just started the service here in September for Stocktwits, and I want to keep all of that together. And we've got $1,000 last week, and this week we've really just sort of jockeyed around positions and held on to them. The only one we've closed out is this one, which is the XLE shares. All right, so that's really what's happening. When you go in there and you look, you can see what happened. And listen, I'm usually a little bit early to these trades, so you often can see me after the end of the day, look at the chart and get a better feel than me the next day, or you can ask me a question and say, hey, listen, do you still think this is a trade? Should I wait? So blah, 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 whatever it is that you want to do, okay? So that's what I wanted to show you. Everything comes out this way. I am not going to add anything else. We've got a number of trades here, plus I'm in the futures market all the time, and so that really is the top of my bandwidth to do everything here with everyone and trade like I normally trade in the other space. It's the top of my bandwidth, right? So I can't take any more trades and manage them well, and that's what I really want to do. I want to manage them well for us. All right, so that's it, folks, and hopefully we'll have a nice move tomorrow. Oh, let me talk about SPY. Here we are. SPY, take a look at what we did. We shorted the 295, 298s on the 9th. This is a perfect entry of how it is that I actually work with things. So let's go to SPY, and we're going to look at actually what day the 9th was. All right, so we're going to look at, here is 8th, here's the 9th, okay? So we did the short at the top of this range, the very top of this range. Now, here's an example for you. I said, hey, a lot of times I get into these trades early. if you know that I get in when my price is 293, all you have to do is set an alert that says, tell me when my price action is 293, and I will take the short 296, 298, or 295, excuse me, 295, 298 short spread, and I'll be in there with her. Now, what we've done is take a bit of profit, okay? And today, I took a little bit of profit here. I've got to see what that came out as. I think I only got about 20 cents on that one. So I'll see that in a second. I'll look through that. And now we just have a couple of those left in this space. Now, if it bounces, it is still going to fade. Still going to fade. I am not of the mind that we are moving to new highs. It is just doesn't seem like that. However, if we do bounce, we've got enough profit sitting around in here that theta erosion should bring us back into these lower edges and allow us to get out of the trade without any scratches per se. So we'll see how that goes. All right, everybody, take care, and thanks again for staying with me here.